Thank you all for joining us today for increasing real estate's bandwidth, leveraging the internet, and open data sources to put the right people in the right buildings. My name is Elisa Brem, and I'm on the development team with Edens. Edens is a real estate company that develops, owns, and operates community-oriented shopping centers in primary markets throughout the East Coast. Today, we'll take a look at how open data will permanently change real estate by talking to leaders in the technology industry, by exploring what open data is, how it can apply to commercial real estate, and what potential obstacles exist for integrating it into our industry. Today, we will hear from 3 key players who are working on establishing a useful mechanism for open data to reach the commercial real estate industry. To start, on my right, is Jake Saeed. Jake is the president of Auction.com. Prior to joining Auction.com in 2011, Jake was a managing director at Lightspeed Venture Partners. Prior to Lightspeed, he was an early employee in Cisco Systems' broadband internet cable operator business unit. He participated in its growth from an annualized revenue run rate of $1 million to $1 billion, and from 0% to over 90% of market share. As a student at MIT, Jake was awarded the Carl Taylor Compton Prize, the highest honor given to an MIT student. In 2009, he was honored by the World Economic Forum as one of its young global leaders. In addition, before entering the technology industry, Jake grew up learning about real estate, including construction, property management, and transactions as part of his family's business, and was excited to combine his tech and real estate experience at Auction.com. In the center is Chris Palmisano, who works at Google as an accounts manager for Google Cloud Platform in the US Central region. Chris and his team work with global accounts ranging from startups to large enterprises, ensuring their success leveraging Google Cloud Platform solutions in computer storage, big data, and application services. Chris is a former Marine officer and is an Iraq War veteran. He holds a US patent in mobile computing and several Google developer qualifications. Joshua McClure is the CEO and founder of RealMassive. RealMassive is the first source for real-time commercial real estate information. He founded RealMassive to respond to the commercial real estate marketplace demand for transparent and easy access to data. Josh is a serial entrepreneur with many successes under his belt. His experience and expertise spans e-commerce, strategic and tactical business management, software development, and commercial real estate marketing. Josh graduated from the United States Air Force Academy. Today's panel will flow much like a conversation more than a presentation, and we encourage the audience to ask questions at the end. I understand that there is some lack of clarity on what open data means, especially as it relates to real estate. So to begin, can you each briefly explain your definition of open data and how you see that definition changing in the future?
So from our perspective at Auction.com, we're an online marketplace for transactions. So think about eBay for real estate. And for us, open data is really at the heart of creating trust around a transaction. Everybody knows in real estate there's tremendous amounts of information asymmetry between sellers and buyers. There's also asymmetry amongst buyers, right? And that's how people get an advantage in a deal. And we believe by creating a open, transparent marketplace and leveling the data, the playing field using data, actually sellers win, buyers win, brokers win. It's a net positive for everybody who participates in the transaction.
Yeah, I'm Chris Palmisano from Google, and what we view open data is as any data that's free to use, reuse, or distribute. Usually comes with some sort of requirement for attribution. So if somebody's sharing data with you, you thank them for sharing the data and then make something available for free on your own. It's likened to open source software, if you've heard of this phrase before. Open data is roughly the same thing, but on the data side. And we're starting to see more and more initiatives in this around, in and around the public sector, and now the private sector is getting involved as well. A good example is where we live down in Texas. The comptroller's office is putting out open data, and developers have come on in and built applications that show how state contracts are getting awarded, what they're getting awarded for, performance against established criteria. So we're seeing a lot of unique ways now that open data is being used for transparency as well as now in real estate. And some other ways in which it might affect commercial real estate, you think about how this will change the way you interact with customers, clients, partnerships, some changes at the tactical level, like What does your workflow look like? Do you walk into a meeting with RealMassive running on your computer? At the strategic level, who are you hiring? What partnerships are you entering? What markets are you entering? So we're seeing a lot now with open data.
Hi, I'm Josh McClure. I founded RealMassive on the idea that landlords want their spaces to move. They want to move their product just like anybody selling something on Amazon. And the specifications for boots, for instance, on Amazon include the size of the boot, the tax associated with the boot, and the size of the boot, whether it's going to fit you or not, right? Well, paradoxically, in commercial real estate, brokers tend to be a little bit more closed on the very data that you need in order to determine whether or not, as a CEO, you can fit into that space. And so that doesn't make sense. Asset managers don't believe that that makes sense. And brokers really are in competition for that asset manager's business, right? And so, so there's companies like View the Space, there's companies like Loopnet, CoStar, et cetera, who are trying to manage that data. We're also in the business of managing that data. What sets us apart, I think, is that we are completely open. Comparison would be LexisNexis and Google. LexisNexis was a very high premium product. It was a closed data loop. Google is absolutely free to use, completely open with their data. That is what RealMassive is for lease availability data, or the marketing data that you need in order to you need to get out there in order to get people interested in your space enough so that they'll contact you and want a tour of the property. We also believe that there is a hard line between open data and proprietary data. So, for instance, the nitty-gritty on a building, the type of thing that auction.com would deal with in a for-sale transaction, RealMassive stays away from that data. And if we have any kind of like tax-worthy data or data that might be used, for instance, in litigation, we encrypt that data and only give the key to the owner of that data. So we can't even see it ourselves, except on an aggregated level.
So you each sort of talked about different ways that open data is going to change real estate. What are some of the problems that you see open data solving?
Yeah, I think from our perspective, it goes back to, take a simple example of, we all use the internet today in our personal lives. So think about when you go and buy a bread maker on Amazon. I gave this example earlier today. You actually have a lot of information on buying that $100 bread maker. You have ratings, you have reviews. It's easy to compare one item to the next. When people, whether professional investors, part-time investors, or the individual makes a real estate investment or participates in a real estate transaction, they have far less information in making that transaction that's one of the biggest of their lives versus buying that bread maker. And really, open data is the opportunity to bring that same level of transparency, the same level of information to a very important transaction for many people as we have in other parts of our life. And again, we think about it as, fundamentally, it takes risk out of the deal. When you take risk out of the deal, you get more buyers to participate, the sellers get a higher price, and the buyers are willing to pay a higher price because they're not discounting for risk.
A couple of other interesting things that I'll add. When you have a closed data loop system, like most of what happens in your industry today, you're limited to the products and services that the owner of that data can create. So you've got a limitation on innovation. And so when we have open data platforms, you have then an opportunity for entrepreneurs and investors and other participants in any ecosystem to create new stuff that we just haven't thought of yet. And so there'll be new features, there'll be new functions, new services you can provide your clients, your customers, based on new technologies that are developed as a result of open data. And the other one I want to talk about is this movement of bringing what is traditionally bigger sort of corporate technologies and bringing it to the consumer. So this consumer technology stuff that works really, really well should make its way into your industry as well. So you'll see people running around with their mobile phones and using email systems that look a lot like what they do in their personal lives. These technologies will make your work a lot better. At Google, we like to say you should work the way you live, and there's applications to your industry from that perspective as well.
From a marketing standpoint, and RealMassive really is a marketing platform, data has to be open. In order to get your data out into the hands of people who want to purchase or lease your product, you have to be able to spread that data to the wind, and preferably targeted to the demographic that wants your product. So for instance, commercial real estate lease availability data needs to be on LinkedIn, needs to be on Twitter. We're doing that now. We have a partnership with Google as well as Twitter. We're working on that with LinkedIn. LinkedIn, I don't know if any of you know anybody at LinkedIn, but they're really hard to get into. The point that I want to make is once you get that marketing information out there, it actually makes the whole process much more convenient, especially for smaller spaces. And I had a really good conversation yesterday on yield. When you look at the value of a building, it's really coming from a mathematical calculation, a yield calculation. And really that all goes to occupancy rate and the rates that those people are paying in the building. When you fill up a building, you can actually raise the rents on your current tenants even. And so that's where everybody's focus really is, I think should be in this room, is how do you maximize yield? Well, a 3,000 square foot space, try to getting a senior broker at CBRE or even a junior broker at JLL to deal with a 3,000 square foot space or a 5,000 square foot space. Yet when you look at yield calculations on a building, you can see that the last 20%, the last 10% of that building have an outsized effect on the yield calculation because you've already met your break even on the building, right? And so from that point forward, it's just free money. And so the difference between 86% occupancy and 96% occupancy is a huge impact on yield. So if there's a broker in the room who's resistant to marketing that 3,000 square feet, are you gonna do the work? Are you gonna take one of those young startup guys who doesn't know anything about commercial real estate and do the weeks or months worth of work to do the 3,000 square foot deal? I don't think so. You want to be working on the 10,000, the 20,000, 100,000 square foot space. And so where RealMassive really has a huge impact on the market is filling in those smaller spaces. And the equivalent impact on a $12 trillion industry is really somewhat incomprehensible, and so I'm not going to put a number to it, but I think you can think about it.
And maybe one thing to add, when we talk about open data, this is a shift for the industry, right? And I guess the analogy for open data that I think maybe is more appropriate is maybe Google Circles versus Twitter, right? Where there's different levels of data that you want to share with different participants. You do want to share it, but you don't want to necessarily broadcast everything. If I'm selling my building, I don't necessarily want to broadcast to all my tenants that I'm selling it tomorrow, right? I want to kind of work with people that I know are going to be interested, but not, tweet it to the world. And so, the idea of how you take data and open it, but open it in a way that really meets the needs of all parties involved is something that I think we all think through versus, you're not hearing us say, gosh, we should just tweet all data to the world and that'll solve world hunger. That's not the case.
Yeah. This is coming. I mean, it's coming like a freight train. And our friends at McKinsey tell us that we're looking at an additional $3 trillion of economic activity worldwide in just a few years from open data platforms and open data movements. So this is coming. And that's the big strategic consultancy guys telling us that this is happening. So it's happening at the big picture level. It's happening at the micro picture level with individual firms, like what you're seeing with Josh and his startup. So it's coming.
So off of that,
yeah.
sort of, it's almost nuanced of how open the data gets, right? So I want to sort of push you a little bit further because today a lot of real estate professionals make money by having that insider information, right? So how do you see open data changing that? And how do you see open data sort of removing that from the process? Is that what's going to happen?
Yeah, I think where open data is going to get traction is where people really feel it's the opening is not just for the sake of being open, but it's really adding value to the equation. And so from our perspective, when we think about you're selling a property, you want to open that data to the universe of qualified buyers, right? And really make sure that buyers aren't excluded because they don't happen to know, such and such person in that market, so they don't have an inside track. So there we think it adds value, right? The seller is going to see more demand, buyers are going to have more access, there's going to be potentially another relationship for the broker to cultivate. But again, it's not, taking it to the point where, hey, after the transaction is done, you're going to have my rent roll on a website that people can see what my tenants are paying and when their leases are up and when they can be called to get taken away to the next property. So it really becomes dynamic. It really becomes, again, kind of like a Google Circles analogy for the relevant parties and the relevant time. And if you could dynamically open up data, the right types of nitty-gritty data, you're going to add value to the equation. And then when you take that data and you aggregate it up, you make it personally identifiable, then that data actually can continue on. And when people can then use the transaction data to say, okay, I have a real-time sense of what rents for this type of property are in this part of the market, that becomes, again, very powerful and additive to everybody's business. But it takes away the personally identifiable nature, which is not needed after a transaction completes.
So does it remove all asymmetry of information from the industry? So everyone's provided with the same information and then they make decisions off of that, or?
I think you could, make an analogy similar to the stock market, right? Again, 40 years ago in the stock market, it was insider trading, right? You went to the White Shoe Golf Club, you had a buddy who was the CFO of a company, he told you what was going to happen, and you had insider information to make a decision. With the digitization of the stock market, people like Charles Schwab, where research has been democratized, the ability to transact has been democratized. There are more people that have access to information, but what people do with that information is different, right? People will have a different investment thesis and use the same information differently. So that's why I really believe you can open up data, and each firm, each person can still leverage a competitive advantage based on how they make decisions and their investment philosophy. You don't need closed data to give you an advantage, and the stock market has shown that it can work with open data.
Open data is really about control. It's about decentralized control. So closed data systems are somewhat similar to a command economy, the Politburo, Russia, the old Russia, right? And so when you democratize the data, you put the data in the control of the owner of the data. And so, especially in commercial real estate, you have an owner of a physical asset, right? And I think it's more than somewhat unfair to say, okay, thanks for giving me the data about this physical property that you've invested millions of dollars in, and now that you've given me this data, I'm going to charge you to distribute that data or to download that data, right? And so open data systems really mean you put data in and you get all the data back. And so back to the control issue of if you want to limit the amount of data that you put into a database, what ends up happening is that fewer people know about your product, right? And so, for instance, on RealMassive or on Google, you do a search for commercial real estate. If you're hiding, let's say you're looking for $32 per square feet, right? And if you're hiding that rate, your $32 per square foot property is not going to show up on Google or RealMassive, right? Because it's a relevancy-based search engine. It's not a listing site. It's a relevancy-based system. So the difference would be a listing site is like Craigslist or Loopnet, where you post a listing, and as soon as you post that listing, the next person to put a listing starts burying you, right? And so after a day or so, your property's kind of disappeared, right? In a relevancy-based situation, you have an algorithm that actually is returning what the artificial intelligence, what's the machine learning is saying, okay, I think this is what you want. And after a while, it starts to predict what you want. And so RealMassive is actually built on Google's system. And so the same servers that are returning you relevancy-based searches on Google are returning you relevancy-based searches on RealMassive. And if you're not putting your data in there, clearly your product's not going to show up, right? And that just has to do with a mathematical algorithm. And so really it goes back to control. How much data do you want to voluntarily put into the system? That's what you're going to get. You get what you give.
Whose responsibility will it be with an open data system with real estate to put information in, verify it, and get to a point where there's enough of a critical mass of information that it's relevant and a useful tool?
So a lot of companies have tried this, actually. In the 2000s, Loopnet was actually founded on the same exact idea. And what ended up happening is, unfortunately, 9/11 took the wind out of any investor's desire to invest in any kind of technology product. And what ended up happening was Loopnet, over a certain amount of time, got acquired by a closed data system. And so that ended that kind of dream for commercial real estate, for the commercial real estate players to take their data back and be in control of it. We have a situation today where there's a very tech-friendly environment. Investors are ready to support something like this. And every commercial real estate broker that we talk to has a smartphone in their hands. And they use Google. And they are tech-savvy, actually. And so they see it coming. And we walk into a room and they go, hey, I saw this coming. This is, well, finally, this is here. And so who updates the data? It's all the large players have marketing managers on their staff. Currently, their role is a sales assistant, basically.
Large players being brokers?
Yeah, brokerage houses, agencies, third-party listing sites.
Okay, not the
agencies.
owners, the brokers.
Yeah, that's right. Not the landlord, not the asset manager, but the third-party listing agency has marketing managers on staff. Generally, what they do is update brochures, PDFs, et cetera, send the broker blasts out, update CoStar, Loopnet, Excelgent, et cetera. What we try to do is merge into that workflow, automate that workflow for them. On average, we're saving about 12 to 14 hours a week for the marketing managers that are using our system. We have several products that just automate their workflow, update everyone for them as soon as they update it on RealMassive.
I think also, for both of our companies, even though somebody else actually puts in the data and is quote-unquote responsible for the data, I really believe our customers are going to look to us to be responsible, really, for the data. So, again, if you think about other sites you use, if you buy a hotel room on Priceline and you show up and that's different than the picture you saw on Priceline, you're going to be very upset with Priceline and won't use Priceline again. Similarly, if we have data on our respective sites that people cannot rely on, they will blame us. They'll blame our site. And so at the end of the day, the buck is going to stop with us as the company is standing behind it and saying, hey, we represent that this is real information. But we have to work very closely to make sure that what we're getting, is accurate and reliable. And but ultimately, I view it as us as the ones responsible.
It's a shared responsibility among all of the participants, really, in the ecosystem that are using the data. And the business models will probably take quite a bit of time to evolve, but the way in which you operate using data is what will probably change first. So I view it as a shared responsibility among everybody that's playing.
So you also spoke about removing the specific building, right? So once you've shared the data, you can remove aspects of it so you sort of lose its identity and it becomes, it's mainly directed at you, Joshua, although both your input would be great. But can you talk about how, is there a loss of nuance by not knowing what building, and how do you build the credibility behind the data so that the end user, the people in the real estate industry can not lose the nuance of the specific building, because it is a building, and still find value in the information.
So the precedent has already been set, actually. So privacy policies are there for a reason. The internet companies, the tech companies, are responsible for not releasing personally identifying information without the explicit authorization of the user. And in this case, it's about control. It's about releasing the data that you want to release. And then there's a collaborative process, right? So you introduce this data into the system, and then people start interacting with it. And then those interactions really are the conversation that generally happens over lunch or over coffee between brokers, right? It doesn't get recorded anywhere, so except for in the broker's brains. And so they start to understand where the market is. They get a feeling for the market. But it's a limited perspective because it's only the people that they have time to go to coffee with and lunch with, et cetera, right? And the discussions around the boardroom, if they have a collaborative process within their own brokerage, right? So what we do is we monitor the sort of conversation of supply and demand. And what emerges out of that is a bid-ask spread, right? And so what in commercial real estate we refer to as a comp, is actually something that I think is not necessary in the initial research of a building. A comp is actually a very unique data point. It has to do with credit rating and length of term and all kinds of other variables, right? Versus a bid and ask spread aggregated across, for instance, a city block. Now, that's very valuable information because you can see, oh, this is generally what things go for here, and now I can use, or a broker can use, their talents and their experience to negotiate within that window, right? Versus a comp is, you're at the negotiating table arguing about comps. Well, probably every broker in the room knows how to kill a comp argument, right? Well, that's a specific, unique point. It doesn't apply to this situation because of this. If you have a bid and ask spread, well, now you've got boundaries for the negotiation and you've added value. Both sides want a bid and ask spread, right? So they have some sort of certainty, some sort of predictability about the results of that negotiation.
Yeah, I think you could think about it like peeling an onion. If you're transacting, right, you need the core of the onion. You need to know the leases, right, and that tenant, that lease term, and all the bells and whistles. When a transaction is complete, the opportunity is, again, to remove it from personally identifiable information and take it to aggregated information. Now, that's where, the nuance is important, right? If it's too aggregated, you haven't created anything useful. If it's, too detailed, hey, that tenant in that building pays this much per square foot and their lease ends in 3 months, people aren't going to feel comfortable with that. And so I think this is a new area for the industry, right? And, there's going to be a pendulum that probably moves back and forth on what people are comfortable with, what people aren't. But fundamentally, we believe there's probably a sweet spot where if you said, okay, by property type, by market, if you can have, information, whether it's leasing or transactional, non-personally identifiable information, that actually would be very, very useful to all the participants. And with data, there is a network effect. So, while there are some large brokerages, not all the brokerage market is relatively fragmented. And certainly when you go, down market, sub 10 million, the largest broker there has 8% market share. So the benefit of being able to aggregate from different sources actually accrues benefit to all the participants.
So one of the concepts that we'll add here that we mentioned earlier today is there's this data creation loop that I've started to call it the data creation loop. So to give you a good example, I'm sure everybody here has a Facebook account. So Facebook has created a new system. It attracts a lot of users and a lot of usage. And then among their usage, we have signals and we have some noise. Those signals become very interesting and they become unique opportunities for other entrepreneurs and other participants in the ecosystem. So then these other companies are created. So the Facebook status became kind of like a Twitter. and the Facebook images and photos and the photo share, we now have an Instagram. And the Facebook like spun off into something, now we have Pinterest. And so all of those companies are now billion-dollar companies. And so they're now doing the same thing on their own, creating more data that then creates some signals and some noise. And so these ecosystems continue to grow. So it's another example of really this network effect that continues to grow, becomes more beneficial as there are more participants in the ecosystem. They're using data to drive decisions, and we see more value created that way.
That's right. So on the internet, it's somewhat standard for an open data company to release a software developer's kit and a data feed, right? And so Google is actually pretty famous for that, for releasing really good software development kits so you can build on Google's platform, right? RealMassive does the same thing where we have, you put your data into RealMassive, you can get all the data that we have, all of the publicly available information that we have, you can just download it right into a spreadsheet for all of the United States, right? And we're spending millions and millions of dollars rolling out to all of the major metropolitan areas within the United States. There is nowhere else that you can do that on the internet. We are the first source for commercial real estate in real time. Our goal is to move into the trusted source for commercial real estate in real time. And the way you do that, the way you build trust, one step at a time, and it's by taking the first step, by being open, right? And so the more closed, a good example, the more closed you are with your spouse, the less trust there's going to be. And so in any relationship, the more open you can be with each other, the more trust there is. Just had a really good conversation with CBRE, JLL, Cushman and Wakefield, and Cassidy Turley at a council meeting. And they're all on board. They're absolutely overjoyed. It was an ear-to-ear smile of, we can't wait for this. We've been waiting so long to take our data back. And they want to be in control of their own businesses. They want to be in control of their data.
I think another just practical example, analogy is, again, going back to the stock market, right, if Goldman Sachs could only make investment decisions based on their own, internal trading data and not on the market data, they'd be hamstrung in terms of making the best investment decision possible. So again, if you had, kind of Marcus & Millichap has about 8% on average nationally in the sub $10 million market. If they are focused on, working with their clients to make investment decisions, and the data they have really great access to is just their own data, that 8%, well, they're not going to be able to maximize their ability to make the best investment decisions or help their clients make the best investment decisions. If you're able to open up data, and now all the players can use the market to help their clients. As an investor, you could use the market data and it's aggregated. Then again, there's a network effect there. There's a 1 + 1 is 3 power in that data, just like the stock market.
So if we establish that this is and will be an incredibly powerful tool for the real estate industry, what are the obstacles that you've each encountered in making it available, and what do you anticipate to be the biggest obstacles to really making it mainstream?
The number one obstacle to trust is fear. Fear of change, right? Just as like I'm sure everyone in here works on themselves, building themselves up, reading self-help books, right? And change is key to self-improvement. Improvement is change, right? And there's always this uncomfortable feeling of what's going to happen? What is the improved me? Am I going to like the improved me? And so if we can get over fear by simply putting control into the hands of commercial real estate professionals, that's the key. If they don't feel controlled, if they feel like they're in control, that's it. That's the key. There is no resistance once the professionals are in control.
I also think there's going to be a challenge around the human capital element and knowing what to do with data, how to get data, how to access it, how to build these types of systems. Another McKinsey report had showed about a shortfall of several 100,000 competently qualified data analysts within the next couple of years. And then the number of a shortfall for managers, of people that know what to do with data, how to make decisions around it, how to use it to run their organizations, somewhere between 1.5 and 2 million. So we're going to have some other challenges too. It's like, what do we do with this? But where there are challenges, there are opportunities, and other entrepreneurs can step in and build tools to make it really easy, or make it really simple, or help other people learn how to act with data, what to do with data. So where there are challenges, there are usually opportunities.
And really, proprietary information is an important weapon in the toolkit of investors and brokers, right? It's a high leverage tool that people use to get an advantage in a deal, and so there's going to be resistance to lessening the power of that tool. And so usually the way these things work out is there's a wave that doesn't stop, and I think just the history of the internet has shown that more likely than not, things will be more open 5 years from now than today. And somehow just industry after industry, and we see this in our personal lives, goes in that direction. And one of the things that kind of drives that wave is that network effect of data. First, if there's 10 participants, 2 of the participants, and not the top 2, maybe the bottom 2, work together and share data. Then the next one down says, I'm going to work with those 2, and now you have 3 out of the 10 participating. And then at some point, when 6 out of the 10 are participating, those other 4 are feeling left out. Those other 4 all of a sudden have less data than those 6 small guys who've cobbled together their resources and started to share. And so usually, in the technology world, it's called death from below, right? It's the small guys getting together, sharing, comparing notes, and then all of a sudden, when a bunch of small guys work together, they're not so small. And then, the network effect of data sharing is that all of a sudden the bigger guys have to either, can't beat them, join them. And so I think that's kind of the patterns that we've seen in other industries that, could play out here as well.
Yeah, and to expand on that, I think if in the past the information asymmetry was where you achieved your objective or your advantage, in the future, that asymmetry will be around technology and access to technology and access to data and access to systems. So you'll start to see the asymmetry move backwards one step. Mm-hmm. So that's something else we're thinking about.
So Chris, when you talk about instead of an asymmetry of data, or information, it'll be an asymmetry of how to use that data?
Or the systems that are producing the data and then presenting it to you in a way so that you can make a decision on it.
So how will that, bring it back to real estate, how will that sort of change how real estate transaction works, brokerage works?
Yeah, you'll need a new set of tools.
Staffing works.
You'll need a new set of tools. You'll have new arrows in your quiver, but the bow is still probably going to be the same. And some of those arrows are going to be data from different sources and from different places, from different tools. RealMassive, maybe auction.com, maybe your brokerage is you're selling some buildings online, you're selling some buildings still door to door in person over a lunch. So you're going to have a whole different set of tools that you're using.
Right now there's basically one source for data, and if that source is inaccurate, then you're kind of just stuck. You have to do the manual labor. You have to go into sort of a data manufacturing role, right? And 100% of the brokers that we talk to, that's the piece of their job that they hate. They just absolutely abhor that piece of it. And these are highly skilled veteran relationship builders, right? They're into building experiences for their customers. And now you can look at the iPhone, right? It's all about user experience, right? And so that's one of the arrows now in your quiver of, now I don't have to spend all this time on data manufacturing. My staff now is being freed up to do all kinds of things for my clients. What level of service can now I can bring to my clients? Now, does a client want to pay for a higher level of experience, a higher level of service? Or is the client paying for you to have slightly different data than your competitor? That's a tricky situation, right? Because the client now comes into the room and he's like, this competitor has different data about the same physical asset. One of them's wrong, right? So which one is wrong in this situation? That's a bad thing. You don't want your customer coming in and saying, are you wrong? You want your customer coming in and saying, wow, what a great experience you're providing here. This is amazing. You guys are clearly veterans in servicing a customer, in managing a building, right? That's data manufacturing. Nobody wants to be a line worker.
Yeah, I think a key distinction is, data by definition is about the past, and making money and investments is about the future, right? And so I think that's why you can create open data, but people still maintain their competitive advantages, their differentiation. Different people are going to take that data and use it very differently and have a very different view about the future in terms of what that data implies.
So we're discussing how open data will change how we understand information associated with active buildings, but will it also provide an opportunity maybe further in the future to think about building differently based on sentiment analysis, information on how people react to buildings or how they respond to different tenants or different elements of the building or amenities?
Yeah, I think there's a huge opportunity there for people, property owners to really understand, in essence, get more signal out of, the trends in for their property and the markets that their property exists in. So certainly when you take a property and you list it, you get a lot of market data. But, in a similar way to, again, having a stock, when you own a stock, you get a lot of information is now on whether or not it's time to keep that stock, sell that stock, buy more of that stock. And so the opportunity for taking market data, sentiment data on non-actively listed properties is really to help people make investment decisions, buy, hold, accumulate more in that area.
So I can rattle off a short list of other techniques like sentiment analysis. I mean, we can give you a couple, but different ways of doing customer segmentation or looking at loyalty or churn models. Are customers going to stay? Are they going to go? Is this retail space more valuable in this part of town than some other part of town? Somebody's likelihood of purchasing or repurchasing, or will they respond to your calls or to your emails? You can build data models around all of this stuff. So sentiment analysis, yeah, that's one technique, and there are many others that I think you'll see tools built around that will help you decide where maybe you should put the next building.
These tools all rely on real-time data, on data flow that is organic and is sourced from the owner, from the source, right? Not playing the telephone game. And so you can infer, you can look into the future, you can have predictive analytics, you can understand what it will probably, down to a statistical level, what is going to happen in your marketplace by simply looking at that conversation, looking at the intent of what people are doing. And so the sort of predictive results that Google returns when you're typing something in, that is an inference, right? And so the only reason they have that is because they're able to see what people are doing across an aggregate large population. That's where statistics come into play, right? And statistics are what allow us to have reasonable predictions about the future.
So is there a limit to how far you can push open data? Like at what point do you close the data, or do you never close the data?
I think it goes back to, what level of granularity you're talking about. Again, personally identifiable information. I think, you close it when the transaction is done. Aggregated information, I think, is something that you'd want to persist.
Yeah, and I would view it as, like, you carry a building on your balance sheet as an asset. Someday, you may carry something like your data as an intangible asset. So this is really where you're going to be able to derive a competitive advantage long in the future. So it's going to stick around for a while, but I don't think there's really any limit to it. The data creation loop will continue to happen, and entrepreneurs will invent and create new things that we just haven't thought of yet that add a ton of value into real estate.
We can start with some questions.
Yes, I have a two-part question. Question one, who actually legally owns the data? The property owner the broker that uploads the data, the portal that presents the data, or the robots and aggregators of data that scrape it and put it in other places? That's question one. Because there's a lot of legal issues about the ownership of the actual data and the intelligence you glean from that data. Question two is a little more provocative. Big data with the explosion and the datafying of everything and the measuring of everything and the internet of everything, as you all know, this massive explosion of information in real time. There's also another universe over here no one's really talked about the creation of the algorithms that can interpret that data, that these algorithms someday create an app on your phone that you can say the parameters and it'll talk to you and say, here's all available buildings for rent, the price points and everything else, and then make suggestions and advice. The question is, 10 years from now with this technology explosion, will your broker become an algo or an app?
So who owns the data and what is the impact of algorithms on commercial real estate? So who owns the data is actually not a debate at all. It's a contractual fact. So whatever system you're using to share data, whatever system you upload data into, there's a terms of service that you sign by using that system that says who owns that data. So currently, the proprietary closed systems say that they own that data and they have full authority to do whatever they want with that data, including cut you off from it. With RealMassive, you can go to realmassive.com and read our terms of service. Our terms of service says that you own the data, that you are granting our company a worldwide license to distribute that data for you as long as you want us to distribute that data for you. And so basically we're your marketing department. So as far as, that's contractual law. As far as like the laws of nature, all men are created equal sort of thing, the person who, or entity that owns the physical building clearly owns the data, right? So where contractual law sort of gets into a weird predicament and becomes some unfair is when contractual law is not meshed up with the laws of nature.
And I'll take the second question to talk about whether or not does the broker become obsolete? Do we just have an app that does everything for us? I don't think so. So people made these predictions about salespeople when the internet came around. They said, oh, we can sell online now. That's it. We'll never have a cost of sale again. We have more salespeople in the economy today than we've ever had. Even in technology, we have even more salespeople than we've ever had. So online, to me, has just become another sales channel that I have to manage. And so I think that our financial advisors, have financial advisors gone away because we have all these other tools that exist in financial services? I don't think so. They certainly haven't. I think, though, that the way in which they work is changed, and they do present more data or more information to their clients. It allows for a better and a more unique and differentiated experience for those that are using it really well. So I think you'll see brokers, some will lean in and some will adopt this technology and use it and become known for that, and then some won't. And that's really up to the market how that plays out.
I think it does, again, continuing with the stock market analogy, I think it does, probably, turn into a world where, there will be more self-service, there will be more discount service, but there will also be continued full service. And, as mentioned, full service brokers will focus and do a different set of activities than they probably focus on today or that they did, 20 years ago. And so I also think it'll probably migrate from simpler properties, first being more self-service oriented, maybe, residential properties. Your complex property is probably going to be the last to, be a self-service property. But if you look at whether, again, stock market, you look at StubHub, over half of StubHub is still ticket brokers. So these online marketplaces, really add more efficiency. They actually become a tool for the best brokers. And the folks who get replaced by self-service are usually the ones who weren't that good anyway. And the best brokers probably do more business because now they actually can do more transaction in a day, in a given day, in a given 24 hours, because they have better tools and a more efficient system.
Yeah, and to the question about the data and who owns it. We have something that we sponsor that we talk about called data liberation, where we want to give people the ability to take their data in and out of our systems at will. If you don't like the way we manage it, feel free to take it someplace else. And we make tools available for that. So something that you store in Google Docs or Gmail, those are easily downloadable. You can take them completely out of Google. The RealMassive database actually lives in a Google data center, but that's his data or your data. It's not ours. And then my personal rule of thumb when it comes to this stuff is I give up my data wherever I feel like it's making my life better or making my life easier. So little food for thought.
Yeah, this is fascinating, but a couple of thoughts come to mind. I mean, I get the data applications, particularly in the retail side, when you can talk about traffic patterns and shopping preferences and how people move around malls and what have you. But when I think about it in terms of the office industrial space, this is pretty static data, right? It doesn't change day to day. It changes month to month and over 6 to 12 months. It's not this hourly kind of movement. And it seems to me that the real obstacles are culture and compensation, right? I mean, you've got CoStar doesn't want you to share open data. They want they want people to pay for that. Tenant rep brokers don't want to have this data shared freely because that's where they create value. When, from a capital market standpoint, every investor that we deal with right now, one of the first things they say is we want to look at deals that are off market, right? I mean, that's a massive theme that we hear today. So you've got some really big obstacles, but you've also got a marketplace that doesn't move minute to minute. It doesn't move, week to week. It moves kind of month to year. What are some other industry anecdotes that maybe can help us understand? Because I can see it impacting some areas. I can see in other areas where it's just not relevant.
I don't know if it, maybe it's not minute to minute, but, if you take the office space, companies are growing and shrinking all the time, right? People are adding headcount, letting go headcount, the various linkages that office building owners care about in terms of what's going on with retail or places to live nearby, people moving in or people moving out, are houses becoming unaffordable in that area or less affordable. This goes back to open data and also big data, which is, when it's easier, when you have the tools to analyze, you could actually start looking at a lot more things. And when you start looking at a lot more things in aggregate, they are changing relatively frequently. And again, with the right tools, you can make a more informed decision, even in something that is on the surface, more static like office.
One of the things we've been chatting about is pharmaceuticals or the drug industry is another one that has sometimes a really long cycle before the project manifests into something that you can touch. And what I've heard is that in real estate, you finance the transactions in different stages. So perhaps real estate transaction data looked at over a long period of time can help you finance these transactions differently or in a new way, or potentially attract new investors the same way it does in the drug industry or with pharmaceuticals.
So I think the value, you addressed something that was an initial concern of mine when I was looking at starting this company, is would tenant reps resist open data? And my initial conversation with a tenant rep, I was actually talking with Dick Anderson, who heads up Hill Partners in Austin, Texas. And Dick Anderson is a former, I think, offensive lineman for Nebraska. Giant guy, very imposing. And he's literally the largest listing broker in Austin, one of the largest in Texas. And I was already intimidated when I went in to talk with him. And he had his head of tenant rep department sitting there in the meeting with me. And so it was like, oh my God, it's like the worst possible situation for a young entrepreneur with an idea and a laptop, right? That's all I had. I didn't have anything. And so I went in there and I started talking about what we're doing. And as head of tenant rep, before I got through the open data speech, I was still talking. He jumped up into the air, put his hands up in the air, and I was still trying to figure out what was going on. He walked out of the room before the door slammed, and his chair was still spinning. He was so angry about what we were doing. He is now one of our tightest partners, that tenant rep. Because now what he understands is there is a giant tidal wave coming to commercial real estate. Are you going to drown in that tidal wave? Or are you going to surf that tidal wave? Because the people who need to move product are the listing brokers. They're the asset managers. The tenant rep is there to provide customer service and to manage the tenant. On the supply side, the asset managers and the listing brokers. When we initially talked to them, they're like, oh, this is great. We'll have a direct connect to the tenant. We don't need to pay this crazy commission anymore to these tenant reps. In actuality, when we talk with them for more than 5 minutes, they come to the conclusion that they absolutely need the tenant rep in there to hold the hand of the CEO who has a vision for this space, right? Otherwise, the deal's never going to get done. And so they want to pay that huge commission to the tenant rep to give them some certainty that the deal is going to get done. Part of that certainty is almost like a credit rating. If the tenant rep is willing to spend their time with that client, the tenant rep has already vetted that client. And so now the landlord and the listing broker, they don't have to vet the client. And so the initial resistance is always, well, I'm a tenant rep, what I do is data manufacturing. That's not the case at all. It's actually, the only tenant reps that do their own data manufacturing are the moms and pops. The large tenant reps actually have staffs that do the research for them. We're working with the staffs of JLL, of CBRE, of all the major players, and we're saving them a huge, huge amount of time. And now what they're able to do is delve deeper into data, go deeper and deeper and deeper into predicting what a deal is going to be like, helping with negotiation, relevant information versus just what's the freaking operating expenses on this building. It's like 3 different reports I'm looking at. What's the future of the market? A good example would be a quarterly report. When you look at a quarterly report for a market, you're actually using data that is more than 90 days old. With real-time data, you're going to be able to know what's happening right now. You're not going to be out of date with the data. That fear is a thing of the past. So you've got current information that now gives you statistical relevancy, a way of predicting what's going to happen into the future. That's more than data manufacturing. That's magic.
And you've been operating up until this point strictly on intuition and instinct, and I don't think that's going to go away. But you have a third dimension in there, which is some data that'll validate some of your assumptions or may prompt you to ask some other questions.
I'm curious if you could talk a bit more about data validation and scrubbing and how you work with it and massage it to make it usable.
You want me to take that?
Oh, go ahead.
Scrubbing the data is something. We have an entire department at RealMassive that scrubs data, but the millions of dollars that we're investing in that is just simply unsustainable, right? The only way that data stays relevant is with the engagement of professionals. They have to take control of their data, right? Currently, market data is about 60 to 70% relevant, depending on who you talk to from the current providers, right? And so you have to do your own data manufacturing, right? When you pick up that phone and you call the listing broker, you are scrubbing the data yourself, right? No system is doing that for you. We have created a system, Google has created a system, auction.com has created a system that helps you scrub the data by allowing your brokers within your own organization to eliminate redundant work. So what we're seeing actually, and I had no idea this existed when I first started thinking about this, is that brokers within a regional JLL, for instance, aren't talking to each other. They have their own spreadsheets on their own network drives that they're doing their own research and duplicating sometimes 3 times, 4 times, 5 times over, right? And so if you're the regional manager of that brokerage, you're just spinning your wheels. Like what level of productivity can you get to if now everybody is completely collaborative, right? That's where the data scrubbing happens, right? And so you've got this open data platform, you're able to see it, everybody's able to see it, everybody's interacting with the data. If they look at a piece of data and go, that doesn't look right, and they just ping that little piece of data. You can do that on RealMassive, right? And it sends a little ping off to the owner of the data and says, hey, market says that might not be right. Is that right? Quick yes or no. Oh, I need to update that, right? And so it becomes seamless, it becomes efficient, it becomes collaborative. All of those words lead to money.
Wikipedia is a great example. Like, it's this completely contributed encyclopedia that has everything on it, and the community manages it. So if the community is set up properly and they're finding value in it, they'll manage it themselves. Now, when you get into like the really nitty-gritty, nerdy database stuff, there are some sophisticated techniques you can use for data management and scrubbing and cleanup of data. But like what RealMassive is doing, they're building the system out, and there will be an interested community that's going to partake in it, see value in it, and you'll see them keep it up to date.
I'd add one more dimension, which is not just scrub data, but structured data. And again, since we live in the heart of the transaction, I mean, we all know that when you're looking to buy or sell, it's PDF after PDF or spreadsheet after spreadsheet. That's kind of their files. But your ability, like if I wanted to say, okay, I want to buy an investment property, and I'd be more aggressive on a property that I knew 100% of the tenants had estoppels already in place. To be able to go on a site and be able to search for, properties that have 100% of the tenants with estoppels already in place. And so, that data has to be structured to do that. And so I think another trend is not just how we scrub and open this data, but again, how we make it more structured so it becomes more usable, so the whole process of transacting, whether it's a sale or a lease, becomes more efficient.
Yeah.
I just had one quick question. As locationally specific as real estate transactions are, I'm curious, how specific can you get? If I own the building on this corner, the opposite corner could be a completely different building. So exactly how specific can you get in the data that you're getting from you guys?
I think about it, maybe just as one perspective, think about it like a camera. And, some people, who are less sophisticated are going to say, you know what, I'm going to put this camera on fully automatic mode and, let the computer give me a best guess of what's relevant, what's not, and, how to interpret this data. People who are more sophisticated say, look, I'm going to put on fully manual, but because I have access to all the controls and picking different data points, I could come up with my best guess. So, I mean, we all know, different properties are unique, different lease streams are unique, but, the importance is, giving people the information and giving people, the right control based on their level of sophistication to do the analysis.
Or to use Jake's stock market analogy, I can subscribe to a service that sends me information and data that's already curated and called and says, buy this, sell that. Or I can go and download the spreadsheets right out of the SEC filings and do my own analytics and come up with my own strategy. So it all depends on, I like giving people the tools and give them the world and then let them decide what they want to do.
Commercial real estate certainly is about location. And generally, when people talk about it, they say location, location, location. And so I like to say it's location in multiple dimensions, right? So chronology, not just geospatial. Imagine you probably all done searches, buildings built after 1980. When was the last time these sort by when the last refurbish date was? Does it have a view? What's it facing? All of those are the fingerprint of a building. And so that fingerprint at the personally identifiable level is unique, right? But when you aggregate it across, you say, well, there's lots of buildings that have this. And so now I can have a bid-ask spread on buildings that are very, very similar to mine. And so that's not a comp. That's not a comp, right? And what's fun about that is, apologies to any taxing authority representatives in the room, but you're going to have your work cut out for you because the comp is going away, and this bid-ask spread is now coming into the market. What happens with dynamic data?
I was wondering if you you could comment a little bit on how you think this will impact international leasing, as far as, very locally it would kind of make sense if a broker is already familiar with a lot of locations or with neighborhoods or with New York City at large. Kind of once you start growing beyond that, if you're going to start having foreign investors in buildings.
Yeah, so one of the things that we've seen happen is if a platform like RealMassive takes off here locally, entrepreneurs in other countries will create something very similar for their own markets. So if this works, I think you'll see it happen everywhere.
Yeah, and I wasn't sure if also the question was asking, if you're, a corporate office in London and you want to lease in Austin, what does this mean? If that was kind of the question, then, I think the value of this data, grows exponentially because, folks who are out of market don't, they are really in the dark, right? They're not buddies with the local broker. The information isn't easily accessible online. And so if you democratize the data, then I think you actually do get more out-of-market participation, whether it's a lease or whether it's a transaction, quite frankly. I mean, we all know the impact of the Chinese buyer, in the U.S. real estate market. I would argue that would increase significantly, if that data is democratized, people who are out of market. I mean, we live in, I live in California. I mean, there's wealth in California that isn't going to see, 10% cap rate buildings. You're going to have to invest at 5% cap rates. It's very hard to invest outside of California because that information, in those local markets is closely controlled. I would argue, again, if you democratize that data, you'd have many more out-of-market participants, flocking to achieve cap rates that they just don't see in their own markets.
I feel like Jake is answering Josh's question, and Josh is going to answer Jake's question. So he was talking about leases, and I think maybe the question was actually targeted towards investment and looking at this problem from a national perspective. We want foreign capital invested into the United States. It absolutely is wonderful for our economy, and we certainly need it, right? So when you have an open data system, you have some trust there because it's not one entity controlling the data and perhaps skewing the data, right? You have all of the participants in mass are almost forced into a more honest role with each other. And so foreign players now have more trust in the system. In this last council meeting, actually, what this leads to, and that's where the conversation went in this council meeting at the University Club, was a self-regulating organization of professionals. So that you don't have the government moving in and regulating commercial real estate. Now that you have this open data platform, you're going to see a lot more transactions happening. There's an almost unlimited amount of money overseas, especially in China. They need something to put their money in. It's called a capital sink, kind of like a heat sink in hardware technology. But they're buying gold like crazy. They're buying real estate like crazy. If we open this up and give them a trusted platform, give them trusted assets to purchase, now it's not just a black book game anymore, right? Where you have maybe 3 buyers that are potentially interested in purchasing a building. Imagine having 20 buyers interested in purchasing a building, right? Well, now you have this sort of freely competed bid process that leads to kind of an auction, right? And so you get an optimized sale price for a building that used to be just only based on what I just wrote down here, yield, right? You get more of a kind of efficient market. You get a supply and demand based transaction price that the fundamentals are justifying. So you look at the equities markets, right? If you trade purely on fundamentals, well, then CBRE should have a much higher market capitalization value than, for instance, CoStar, right? Just purely on fundamentals. Look at revenue, right? CBRE is greatly undervalued compared to a CoStar. And so it's not just based on fundamentals. It's like yield. It's also based on where people see the market going, and it's also based on supply and demand.
So brokers tend to hoard information because they're competing with other brokers even within their own office. So I'm curious if you've been a part of any conversations with the major players about altering the individual financial incentives to encourage collaboration for the benefit of the firm.
Yeah, so commissions drive the train, right? And we have had conversations about that, especially with the third-party listing brokerages who kind of resent the large, sort of lion's share of the commission going to the tenant representation side, especially in a situation where perhaps they don't feel like the tenant rep earned it, right? Maybe they just made a quick call, and now they got a 4% commission on the deal. So I think there is a little bit of interest in maybe going direct to the tenant and maybe cutting those commissions. I think as if I was a third-party listing brokerage in charge of a large region, I'd be really, really careful about doing that because financial incentives work. And if you are now offering us a lower commission on your properties than your competitor is, it's market driven, right? And so it becomes, if you want to attract bees, have plenty of honey.
Yeah, that's not at all what I meant. I meant within an office, 5 or 6 teams might keep their own database of everything because their commissions are diluted every time they bring another player into a deal. So, is JLL talking about switching, splitting structures or anything to encourage someone to give the info even if they won't necessarily be a part of these deals?
So this actually goes back to game theory. There's several Nobel Prizes on this actually, where if 2 players collaborate, they have a certain result that is positive. If the 2 players work against each other, there's 2 possible results. They can either fail completely or one of them wins the lion's share of the deal. What's been proven over and over and over again, I don't know if you saw the movie Beautiful Mind, that science actually says that collaboration ends up giving everybody more money. It's almost a sort of a magical thing where it's collaboration actually makes everyone more money. What you have to have is trust. You have to trust the people that you're working with. If you, at your brokerage, you're not hiring people that are trustworthy, that's a different problem altogether.
Yeah, I guess my 2 cents is I think you're talking about a structural challenge, and I doubt that's going to get solved anytime soon. But I think it's also why naturally it makes sense for a third-party player outside of the brokerages to play this role, to be that Switzerland, for all the reasons you mentioned, for a brokerage to do it on their own internally, it's pretty tough.
So I want to thank G, Chris, and Joshua for sharing their thoughts with us today. I think that this is a topic that's very much in the process of being shaped and has the power to destabilize and revolutionize how we approach our industry. And I think it's really an exciting time and something that we're going to see dramatic changes in the future. And I'm sure that this will continue to be a topic at ULI sessions and that we'll all sort of see integrating into how we do business. So thank you.
Thank you.